Welcome to Pods and Ears, the podcast for grain elevators, processors, and feed mills who are ready to turn their scattered data into a strategic advantage. I'm Rob Huston, co-founder of Innovative Grain, and over my 30 years in the commodities business, I've seen what helps grain operations thrive, and my goal is to help you do the same. In each episode, we're going to challenge the conventional thinking about how you view your data and your ROI. Whether it's unified data systems, business intelligence, or just making smarter decisions with what you already have, we're here to give you practical insights you can actually use. Let's get started. This is our fourth episode. I've invited Dale Durchholz, who I had the pleasure of working with at AgriVisor. He was an analyst for many years at Illinois Farm Bureau and then joined Growmark and worked alongside me at AgriVisor to continue with commentary to help farmers sell cash grain. Dale, you wrote the Cash Strategist for many years, and I know that was anywhere we went to speak. A lot of farmers would read that Cash Strategist each week, and a lot of them use that as a benchmark to help guide them in making marketing decisions. So, pleasure to have you on the podcast, and thanks for coming.
It's good to see you, and it's always fun to talk with you. I've had fun times with you over the years.
For sure. Well, I wanted to begin by, just allowing you to introduce yourself, your background. I think you've got an amazing history, and I'd love for everybody to get a chance to know Dale Durchholz.
I have a history that's like a lot of people in the commodity industry. We came in from a rich variety of backgrounds themselves. I grew up as a farm boy in Illinois and went to the University of Illinois, not even wanting to get into the commodity side of the business. I wanted to go off into the ag machinery side of the business and started out in ag engineering and devolved out of there somewhere along in my school years and ended up graduating with a BS in ag. Unfortunately, at a time when the Vietnam War was going on, this is back in the late 1960s, right
Yeah.
around 1970s when I graduated, draft number of 100. Nobody would touch me on employment, and that was rarely the case with anybody that had a low draft number because we had a lottery. So I waited for Uncle Sam to decide took him about 12 months to decide they weren't gonna draft me. They didn't like my blood pressure, it was marginally high, and they just decided no, and I went, "That's fine, thank you, goodbye."
Yeah.
Uh, and at that point, I was working construction, and went, let's just go back to grad school. So I took a side class after that, in a university down in Springfield, Illinois, just to kinda get my educational mindset rolling once again, how to study, how to deal with classwork, and started looking at universities, went back to the University of Illinois again, where I'd gotten my BS, because by that particular point in time, I had an interest in the commodity side of the business, and they had a world-renowned, uh, commodity educator, Thomas Hieronymus, and so I went into the MBA program, which was really unusual, a 2-year program, and did some independent study with Tom on the side and got out 2 years later and then went to work in Iowa for, Farm Advisory Group, Farmer Marketing Group back in the middle 1970s. From there, went to Chicago, and the time I was in Chicago, I always tell people, very fortuitous. We had just started foreign exchange trading. We
Mhm.
had just launched treasury bond trading, and while I was there, had launched Dow futures or
Yeah.
S&P futures.
Right.
And the financial market, if everybody remembers, really was where all the action was back in the early 1980s with the inflation rate up there in the high teens and you had bond rates that were getting up there. Well, 30-year mortgages were touching close to 20%. So, all the volatility, all the action was there, and that was really the microcosm, a huge learning environment at that point, away from the grain trade, away from anything agriculture, where I did most of my work, but one that really had lots of benefit in understanding how it all fits together. And while I was there, I actually had the opportunity and spoke with him, 2, 3 different times, Jake Bernstein, and he was one of the original people that really started pushing cyclic analysis of markets, commodity
Mhm.
markets in particular, and as I tell people, he had a book, and the book, and I'll put it in front of my face, uh, A
Yeah.
Handbook of Commodity Cycles, A Window in Time. And that was the first book he did in 1982. He wrote a couple other words after that, but that one to me was the best because it's more of an educational volume. And there's another book out there by Edwin Dewey about cycles, whether it's market cycles, pretty much. And then there's a whole group in California, the Foundation of the Study of Cycles, that not
Okay.
only look at market cycles, but they look at uh, natural cycles that occur in the rhythm of the earth and the environment we live in. But they did a lot of work back in the 70s, 1980s, looking at different market cycles and the drive of market cycles. So that's how I got interested in that particular aspect. It's one piece of what I do. When I got out of college, yeah, I was a traditional fundamentalist. I knew how to punch and put a lot of numbers together and make them work, but I really got interested at that point in looking at the technical side of the marketplace and trying to integrate the 2 of those together in the way I looked at markets and how I saw the picture unfolding. But cycles to me are one tool that I think everybody needs, whether it's a person that's trading, whether it's a farmer marketing, or whether it's people like you deal with, merchandisers.
Mhm.
It's a valuable, important tool because if you know cycles, you can start to build those stories of the way the market might evolve because you have a timing parameter to work with now.
Yeah, and you've seen it unfold, from those high interest rates in the '80s, which caused a lot of consolidation with farms, you know, beyond that, and then, we're in a difficult, margin environment today. So, you know, how has your approach evolved, or has it been consistent over those, decades?
I think my approach has pretty much stayed the same. I use some simplistic technical tools. I use the cycles. This is one book I keep. Another one I tell people that has a lot of value to it. It's the old Edwards and McGee Technical Analysis of Stock Trends. Great book. It's simplistic technical analysis, bar chart analysis.
Mhm.
They've gone through multiple versions of it now. And the other one I keep around, is, Elliott Wave Theory by Bob
Right.
Proctor.
Yep.
It's a book, and I use some of that, in the technical tools simply because it has a lot of measuring tools in it, and those measuring tools are valuable. When you get on a move up or down, you can start to come up with ideas about what kind of potential does this rally have, or what kind of potential downside potential does this decline have in it, and so you can get an appreciation for, where a market might be headed from a price parameter. But price cycles, they tell you where it's headed maybe from a timing parameter. And price cycles, we primarily count from low to low because lows are more regular, highs are not.
Yeah. Well, as with the name of this podcast being Pods and Ears, that's relative to soybeans and corn. What's your current view of the market, for those 2 commodities in particular?
Well, on the long term and the short term, you always look at different things. When you get into your merchandises, some of the shorter term cycles will probably be of more interest to them on a day-to-day, week-to-week basis, but even the long-term things, weigh in. Corn, for example, has a 5.5 year cyclic pattern to it, low to low. We last bottom back there in April of 2020, so the low we put in last summer was a little bit late, but still came along as being a 5.5 year low for the corn market. So you set a market up there that suggested we could have been putting a low in place. In a shorter term sense, right about that time, we put in a 40-week low in the corn market, which is the dominant short term cycle in corn. And so you can start to march ahead and start to understand, things that are going to unfold and happen. For example, this last week, the bearish USDA report, can't
Mhm.
predict the bearish report. But we were in a window here for the 20-week, the half of that 40-week cycle to bottom. So it kinda gave you a time parameter there. We were either gonna bottom before it or maybe right after it, and I think, well, we know now it's gonna be right after it given the market action we've had. But knowing that from a merchandiser's standpoint is important because it can start to adjust his strategies. If I have a market that's getting ready to put in a cyclic low, like we just put in a 20-week low in corn, we can look at that going, right now, my basis levels, if we're going to rally out of here, are probably about as narrow as they're going to be for a while, especially with a huge crop. It'll impact spreads a little bit. And so I can start to adjust, okay, if I think basis is about as narrow as it's going to be, I don't want to be, you know, locking in. A farmer may want to lock in a tight basis, but a merchandiser may not
Right.
because he doesn't stand to make money and how it affects the spreads,
Mhm.
affects his bottom line on how he makes money out of it. So understanding, especially from a merchandiser's standpoint, cyclic parameters, especially on the low side, tells him how to manage or helps him manage both his spreads and his basis trading. Beans, we have both a 2 and a 3 year cycle in them. The 2 year low bottom last summer in beans. 3 years was the 3 year low was 2 years ago, so I don't have anything ahead. Then they also have a 32-week cycle, which we've been in the window for that to bottom here too. Wheat, which a few of your people might be trading. They have a long-term 6 and a 9 year cycle. They don't always bottom together. They sometimes have a 40-week cycle that shows up, sometimes doesn't. Wheat really is still more of a seasonal market than the other two, and I think that's because somewhere in the world, we're always harvesting wheat,
Right.
and so we don't get those cyclic signals that show up quite as well on wheat as we do some of the other things.
Yeah. I love the way, you use cycle analysis to complement, the fundamentals. It doesn't necessarily compete with it. Am I right?
Right, and that's the way I've always used all my technical analysis is, you know, I either use it to complement what I'm doing or if I'm looking at simplistic technical tools like RSI, stochastics, things like that, or MACDs, uh, I'm using that as a check and balance back against what the fundamentals are suggesting at this point.
Right.
So you're always looking at how we can make these 2 integrate together to help you really look at a market and see what's unfolding and going to happen.
And, you started this conversation back in the '80s with interest rates. Do cycles apply to, like, interest rates as well?
Cycles apply to virtually everything.
Right.
They all have different signals, different timing signals, but they apply to all those markets virtually. Interest rates might be the hardest one, because you sometimes question, is it actually the T-bond or the T-bill value that we need to be measuring the cycle of, or is it the actual interest rate we need to be measuring the cycle of? Because on the T-bond or the T-bond value, because we like to measure low to low, you'd look at the low values, but that's also the high value as far as the interest rate is concerned. So it's a little more confusing, but I think in fitting those cycles to things like T-bills, T-bonds, you're just trying to fit it to the low of the value of that T-bill or T-bond, and the same thing really for the S&P. And
Yeah.
these cycles, what people don't appreciate, they're really even bigger. Like I mentioned, the 3 year and the 2 and 3 year in the beans and the 5.5 year in corn. When you look at commodity indices, we can also see in those there are 3 year lows, and there's 9 year lows, and there are 27-year lows.
Yeah.
And to expand that even further, when I was in Chicago, and this was research that was done back somewhere about 100 years ago, maybe not quite, a guy in Russia, Nikolai Kondratiev, he found a 54-year cycle
Mm.
in a lot of things looking at economic variables. I was once reading a book uh, by Betty Bow Lord. Her husband, Winston Lord, was a U.S. ambassador to China, and she was born in China. And so they were living in China for a lot of years. And while they were there, she went around and visited some of her known relatives. And somewhere along the way, she came across an old Chinese proverb. Every 60 years, things change.
Mm,
And that out of the whole book hit me because that matches up to Condrati's 54-year cycle.
right. Yeah.
They're probably somewhat the same cycle with a little variability. That's another thing I didn't mention about cycles. When you get into long-term cycles, you got a window that's about 10% wide where that low may fall. When you get into some of the shorter term cycles, it can, and I'm saying can, get up to 15 to 20%. So you're always kind of on your toes when you're coming into the window trying to define really where is that low coming.
Yeah. Well, I guess I started looking at technical analysis as a commodity broker, and I looked at things like Bollinger Bands and slow stochastics and relative
Mhm.
strength index. What are your most favorite technical analysis tools, that line up and support cycles?
Like I said, I watched the Elliott wave simply because Elliott wave is really a pattern recognition tool.
Mhm.
So that helps a whole lot because you can kind of define the patterns and maybe how those patterns are coming together and are we coming into maybe a low or even into a high. Um, uh, I look at along with those. Well, again, I mentioned the measuring tools, but I also look at I keep my tools simple. I look at RSIs.
Mhm.
I look at stochastics, and the stochastics are like cycles. They're different for every market. They're not you can't use a universal stochastic across the board. You have to find what stochastic really fits the best. And I also use moving average convergence divergence, MACDs. I do watch Bollinger Bands at times, but the MACDs, and the one thing I've found if I'm looking to trying to define where we are in a trend, I take and I compress those daily price series down into a weekly price series.
Mm.
And I find the MACD gives you much more consistency and sometimes will tell you when turns are possibly getting ready to occur. So, I kind of look at those compressed weekly tools or weekly signs to give me insights and highlights much more so than I do the day-to-day stuff.
You've mentioned a few sources, books, but for a merchandiser that's maybe inspired by this podcast and wants to learn more about technical analysis, what advice do you have for them?
Boy, there's a whole litany of sources out there to get information from. I think you start off basic. The first book I ever had, Edwards and McGee Technical Analysis of Stock Trends. It really is a pattern recognition tool. It also has the Dow theory in it.
Okay.
Uh, so it really kind of gives you an appreciation of what you're looking at from a technical perspective. I would then say that you maybe pick up Jake's book on cycles to help you integrate that into what you're seeing. The Elliott wave thing, I think you probably delay a little bit, until you really kind of get some appreciation for the technical side of the mix before you start to delve into that and the things there, because it's a little bit more complex, and you can even go on into WD Gann. There's some other books out there, John Murphy, had some books, Technical Analysis of Futures Market, or now Technical Analysis of Financial Markets, covers a broad base of things. So you try to learn the basics and let them guide you on some understanding of what the technical tools can do for you, and then you kinda build on it. But I still keep all of my work pretty much fairly simplistic technically because it keeps a lot of the useless chatter out, and when you find out what you like and what works for you, you kinda let all that other useless noise go to the wayside,
Yeah.
because that just confuses the mix because there are so many different ways to look at things.
Oh, I agree. Yeah. Investopedia is a website that you can look
Mhm.
up some of these terms that Dale has mentioned, as well if you wanna to look at that. But, well, not I wanted it to be kind of the focus of this podcast, but let's shift for a minute and go to the fundamentals and, not to dive deep into the fundamental side of things, but, you know, a lot of farmers as well as merchandisers are pretty harsh critics of the USDA reports. And you and I have talked about that for years. There's pluses and minuses to the analysis, but you, Dale, at least in my experience, have such a really good understanding of how those reports are put together. And there's a lot of farmers that have, or merchandisers that have this mindset that the government reports are announced to influence price, which I personally don't believe, but I'm sure you've heard that, that
Oh,
people
yeah.
are skeptical of, the government putting a report out there to cause or influence markets. What could you say to that whole process about USDA reporting and the validity of it?
It's maybe not quite as strong as it used to be, but I still think it's relatively robust, and really the problem the USDA confronts today, a lot of the reports that they do, and let's talk NAS, because there's a lot
Mhm,
of, misunderstanding about what goes on. You have a lot of different aspects inside of USDA. You have NAS that puts out the production reports and or the grain stocks reports, the weekly crop condition index, they have a whole litany of things, cattle and hog numbers and all of those. Then you have this other group over here at USDA, the World Ag Outlook Board. They're the ones that put out the supply demand reports. Well, the production numbers that they use come from NAS. So they have to use what NAS has until at least as long as NAS is producing reports. But early on, like here soon, we'll have their February outlook meeting, and USDA will put out their first supply demands for the 26 crop. And they will have their estimate on acreage to be planted and also a yield for corn, beans, wheat, whatever.
mhm,
Those are purely model-driven numbers, and, that's the best anybody has to work with. Actually, and the World Ag Outlook Board has a pretty good set of models. And then we have in the whole acreage dilemma, which is probably the one of the bigger controversies we've had this year because of the miss in the corn acres from the June survey until the final, we added like 3.5 million acres to corn plantings.
right.
Well, middle of the summer, if you're in the program, farmers have to report their planted acreage to Farm Service Agency. So there's a line item of acreages that come out of the Farm Service Agency that we have to do with now. And all of these get integrated together, and they're all USDA, but they're all looking at different aspects of the market too.
Right.
But for NAS that does a lot of the survey work, part of the issue that we deal with now is the return rate. And they are real aggressive about it. They do a lot of they do mail surveys, and then they'll go back and they'll follow up on phone, and do those kinds of processes to make sure that their return rate stays relatively robust, but still it's fallen off some in terms of percentages. And we've also gotten more big farmers instead of having as many small farmers, which creates a lot more volatility in that statistical number that they put out. And anytime you're working with statistics, you have statistical error, like it or not.
Right.
But if you go look at the back of every report NAS puts out, they tell you their statistical accuracy. They lay it all out, and they really don't hide too much in terms of what they do. Um, in terms of, the recent corn number that we had come out here with keeping yield at 186.5, and I didn't expect it. But I understood why when I looked at the numbers and started looking at the parameters. We had generally what I'm called mediocre yields in the heart of the Corn Belt, Iowa, Illinois, into Indiana. But when you look at what I'll call the ring, and it's kind of a crescent starting from Wisconsin out to North Dakota, then south down to Kansas, we had some really good corn yields, and what those did is, and with a lot of those states being a little bit lower yielding states, shored up the bottom end. They
Mhm.
weren't the downward drag that we see off of the high yielding states of Iowa and Illinois that we normally see. Instead, they shored it up, and they allowed the yields in general to be higher. And even though there were people looking for USDA to report a lower corn yield, and I was the low side at 182. I had my reasons, and I had my statistics to back me up, but I was still projecting a new record yield for corn.
Mm,
Everybody forgets that. Even the people that were looking for a lower number in this last report, they were all still looking at a new record, last year being the last record at 179.3.
yeah. And Dale, I've seen some of your analysis, as it relates to yield, looking at, if I'm not mistaken, it's, ear weight and population, right?
Mhm.
I think that's fascinating. Can you go into a little bit of detail about that?
Well, actually, a lot of people don't look at the detail of the USDA reports. We'll look at corn instead of beans, but they're both the same because you have pod numbers. USDA does publish when they start doing their reports in September. They publish corn plant population and ear population.
Mhm.
And they do that through a series of reports, and it has a pretty regular pattern to it of how that evolves, unless you have an extreme year, extreme drought year, or something like that, and then there's some variations. But then they don't actually ever publish an ear weight or a kernel ear weight. They actually collect that data from their enumerators that go out in the field and collect data, but they never publish that out. So the year weight that I use is actually an implied. I take the yield per state against my ear population per state, and then I can figure out my ear weight for that state and also the 10 states that they survey for corn, for example. I also integrate and look at in what I'm doing there, and I've collected for a lot of years the information from the Pro Farmer Crop Tour
Right.
because the Pro Farmer Crop Tour does for corn in particular, less so for beans. They give us the number of kernel rows,
Yeah.
and they also give us the ear length. Well, you can apply, and if you standardize this, it helps. You can apply number of kernels per inch, and so you can compare what you have this year to past years, and you can come up with some kind of number. How many kernels do I have on this ear?
Yeah.
And then the US Grain Council comes along in December, and they publish kernel weight. In other
Okay.
words, they measure the weight of 100 kernels of corn, and they survey elevators to get this data. And so you can come up with an idea of what ear weight, et cetera, is. But this year, really pretty good as far as, analyzing what the heart of that corn belt and really the meat of the corn belt, but it's this ring around the edge that had these exceptional crops that really was behind everything being as high as it was,
Yeah, those fringe areas that often get overlooked,
and actually
outside of the United States.
had larger acreages this year too.
Right, exactly. Well, thanks for I know that wasn't really part of the, agenda to talk about the fundamentals, but I think it's so important because a lot of young merchandisers in particular get really wrapped up in the fundamentals, and as you just described in that last few minutes, there's a lot of information. I think the USDA does the very best they can to report what they have when they have it, and, of course, the market reacts to it, but that going back to cycles and technical analysis, those are things that, oftentimes are less disputable, right? I know
They're
there's
disputable
variances and
too.
yeah, well, there and I guess different analysts can see different things within technical analysis, right?
They really can, and it just depends on what tools you use, and I try to keep things somewhat simplistic, as I say, because if you go down the rabbit hole of getting real sophisticated, you can tend to get lost real easy. And I should understand, because even back in an interesting tale in the middle 1970s when I was in grad school, I walked into my operations research professor one day. I had a question about something, I don't know what. And we were sitting there talking, and he found out through the discussion I was taking a ag econ class with Tom Hieronymus and doing some independent study, and we talked a little bit about the price of corn or beans. I don't remember what. Unfortunately, this was the days before cell phones.
Yeah,
We got up out of his office, walked in the classroom next door, in which case that classroom on the front had about a 20, 25-foot blackboard. We sat in there for the next hour and a half and built a model on how to predict prices. And see, so I understand today also, although I've not delved into it a whole lot, I understand today all of these computer models, all these algorithms that these big funds use,
Mhm.
because it's nothing more than a computer model. And that's what we were doing on this billboard itself. And they'd use
Right.
things even more sophisticated than what I did.
Yeah, that is really fascinating stuff, I think. Um,
We had this model built all the way it could predict the price. You could do it the next minute, the next hour, the next day, whatever, and you took the error between what your prediction was and the actual price and fed it back into the system to readjust your whole system, artificial intelligence.
Interesting. Yeah,
That
for
was
sure.
artificial intelligence, and a lot of people don't understand. Artificial intelligence is really nothing but a huge computer model.
Yeah. Yep.
Garbage in, garbage out.
That's right, and the better the data you have, the better your AI can, process and analyze it.
So true, so true.
Yeah,
That's gonna be the thing going forward is who has the best AI model and who has the best information database,
correct. Yeah.
because that's where the accuracy is gonna come from.
Well, one more risk that we haven't talked about, right now we've talked about fundamentals and technical analysis, but there's also geopolitical risk as it relates to tariffs, interest rates even, which are a very kind of a hot topic right now within the government. And how are those regulated and things like that. What can you say to merchandisers that, think about or read about or are concerned with geopolitical risk as it affects the commodities markets?
I think the biggest 2 things, and maybe we could say 3 going today, keep an eye on what's going on in Venezuela, only because and a lot of people don't think about, and it's gonna take time to get it underway again. They sit on the largest proven oil reserves in the world.
Mhm,
And a lot of people don't understand that their whole, extraction, refining industry has been so decimated, it's gonna take a lot of years to bring that back up to speed again once corporate entities feel comfortable in investing a lot of money back into Venezuela again. I think that's huge. The other thing that I think is really huge is keeping an eye on events in Iran. Now, this is a thing that it's short term and it's even medium length term, but if the Khomeini and the power structure in Iran decides things are getting too tense at some point and decide to leave and create a vacuum and the people get control again, that creates a whole different environment because Iran has been the fuel of a lot of the money that's been really disrupted in the Middle East, as
mhm,
well as some of the other reaches into the world. So I look at those 2 things, and then the ongoing dilemma about, the Russia-Ukrainian war, how does that get resolved? And I think we're marching to some kind of a resolution. That has repercussions that we have to think about going forward. But even as as I look at one other big thing, an idea I've started to entertain, and this is something that's a 15, 20, 30-year trend. When you look at the growth and output in Brazil, when you look at the growth and output in some other areas in the world, and there's even more land to bring in production in sub-Saharan Africa even. Um, I think we need in production agriculture in the US to learn how to be less reliant on the export sector to give us the demand base that we've gotten used to for the last 20, 30 years.
mhm,
So going forward, that means we gotta be more of a domestically oriented market. I think we're maybe on the cusp of changing how people consume food and
mhm.
what kind of food they consume. And so I think producers gotta start looking, how do I change my operation to start to move into an operation that's going to fit with a different environment going forward. I think at some point we're going to see more pastures and cow-calf operations across the Iowa and Illinois, for example.
Quite true, with the price of beef is where it is, yeah,
Well, it's not only that, if the margins stay there between hogs or between corn and cattle, and when you look at land costs, when you look at a lot of land that's in production in Iowa and Illinois even, and other Midwestern states that is more marginal, it's kinda like, would I be better off to have cow-calf pairs on that instead of trying to raise corn or beans on it, when I look at my margins for raising crops?
yeah,
So I
fascinating
see
stuff.
I see an evolution. You know, we've had this push since I was a kid growing up on the farm in the 1950s into farmers getting bigger and bigger and bigger and bigger, and now machinery costs are a huge problem. And I see a point in here where farmers are gonna go, instead of being specialized, I need to be more diversified somehow. And I'm not
Yeah,
sure what that's going to look like yet, but I think we're gonna see more diversification for the farmers that exist and maybe some modest downsizing even.
yeah, and as you said, that may vary by geography as well. Uh, man, all really exciting stuff, Dale. I miss the conversations, when I worked with you at AgriVisor and I would stop by your desk and we would engage in conversations like this. I love it. I wish I could do it more. We should do it more, for sure. But for
You're always welcome to call, and if anybody listen to this podcast,
yeah.
have any questions, they get a hold of you, you know how to get a hold of me.
Yeah, well, is there a way, I mean, what do you suggest? Like follow you on LinkedIn or on
They
X? I
they
know
can
you're pretty
yeah,
active there as well.
they can follow me on LinkedIn if they want. I still have a presence on X. It's a little more political than fundamental in agriculture now, but, it's under the name of Grain Cycles.
Okay.
And, if they really wanna talk to me personally, like I say, they can get a hold of you and you have my phone and email addresses, etcetera. So,
All right.
because I feel a need at my age to pass on the knowledge I have.
Well, you've always been very generous with your time and your knowledge, and you've got a world of it, and I've always respected it. So, for those of you listening to this podcast, yeah, do reach out. If you're a friend of mine, I'll pass you on to Dale, and it's a great resource. So, Dale, thank you so much for your
Oh,
time,
it's
and
been good talking to you, really. Has
y
been.
yeah, yeah, I really appreciate it. Thank you again. And for those listening, if you want to forward this podcast on to and have people download it, it's podsandears.com. It's available on almost any podcast platform out there, whether it's Spotify, YouTube, Podbean, you name it. You can look for us and find it. Thanks so much. Take care. Thanks for listening to Pods and Ears. If you found value in today's episode, please take a moment to like, download, and share it with others in the grain industry who might benefit. Your feedback matters to me, so let me know what topics you'd like to hear more about or what challenges you're facing with your data and operations. You can find us on LinkedIn, YouTube, and at www.innovativegrain.ai. Until next time, keep putting your data to work.